All right. Hello. Good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we're going to be talking about a video topic that I've actually made a video on already. It's going to talk about how you should be buying Yieldmax ETFs for growing monthly cash flow. And the reason I kind of want to make another video on this is because as I get more experience investing in Yieldmax ETFs as time rolls on, I start to see more and more things and can make better assumptions and better videos for you guys on Yieldmax ETFs. And in this video, what I want to talk about is I want to talk about how we can buy Yieldmax ETFs for monthly cash flow. Because of course, you can buy YMAX. You could also buy ULTY, for example, with 100% dividend yield. But just because it has 100% dividend yield doesn't mean it's going to produce you the most cash flow from your investments. Because with ULTY, we of course see the share price and like the NAV erosion. So what I want to talk about in this video is I want to give some examples of some fantastic Yieldmax ETFs. One being Coney, for example. We'll talk about how it achieved a 100% ROI. So basically, you could take out all your money out and play with money that you earn from your investment, have a complete, you could say an infinite return because it returned all your capital and now you're playing with money that you didn't invest. And I want to go over some examples which have proven to not really work as well. So this whole video is going to kind of touch on where you might look to put your money if you're looking to invest into Yieldmax and high yield ETFs in order to protect yourself, grow your cash flow, and keep your capital. So if that does sound good, we're up to 6,813 subscribers. 467 subscribers in the past 28 days. We look at our previous video. That is awesome. 4,000 views. Thank you to everyone who watched this video. And I honestly think it was a great video. Well, $50,000 in YMAX Pay Your Bills. It was pretty fun. And this video is going to be fun as well. I'm pretty excited because I only pretty much invest in Yieldmax ETFs, as you can tell from my portfolio. And my portfolio is currently up about 8%. Which is nothing crazy. 8% pretty in line with the current market over the past 6 months because that's what I've been investing in for 6 months. And I say growing your monthly cash flow. What I also like to say is YMAX, I mentioned so many times that it corresponds to the S&P 500. I look at SPY. And when you look at the initial 6-month return, you're looking at 9.07% versus negative 11.60%. But you have to remember the dividends are also factored in. And when we factor the dividends in, you're looking at about 8.42% over the past 6 months from YMAX, because that is the main ETF that I hold in my portfolio. As you can tell right here, about 15, now we can say about $16,500, which is pretty cool. But nonetheless, this video is about growing your monthly cash flow. So why do I choose to invest in YMAX over something like ULTY, for example? Because ULTY, it's paid a 100% dividend. And in theory, if it's always paying 100% dividend, why are we not just returning our initial investment in 1 year versus a lower dividend? Well, it's also due to the current share price of ULTY, because when it's paying, let's say you bought this ETF at $20 and it drops down to $9. Well, if it's paying a 100% dividend on $9, you're only receiving a 50% return. If you catch my drift, you'll be receiving about $9 in dividends versus your initial $20 investment in dividends. With YMAX has had a very stable share price, and I attribute that due to the fact that it holds all these underlying Yieldmax ETFs. It's pretty well diversified in my opinion. And you have the overall index, which doesn't swing too much. You can see it has days where I think at most it maybe swings 3%, but a Yieldmax ETF will suffer from huge swings to the upside and the downside. YMAX was able to hold its NAV and pretty close to $20. It's currently at $17.30, and it's gone up as much as $18.82 recently. So it's held its NAV very well as the S&P 500 has trended up over time because we don't have huge downswings. When we look at a failing Yieldmax ETF, I like to look at TSOY. And I have the total returns of all Yieldmax ETFs. TSOY is actually not so bad. It posted a 32% return. But when we're looking at other Yieldmax ETFs, which could provide much more cash flow like Coney has returned 163% over the past year. That is awesome. And the main thing when looking at Yieldmax ETFs is not to just look for the dividend yield, because you can look at ULTY and say, wow, it's got a huge dividend, and that could potentially mean it's risky. That might mean the NAV is falling. But look at Coney, for example. Coney, although now at $13, for the majority of the year, it was at $20 and stayed at $20 till for a full calendar year. And so just because it was paying out high dividends doesn't necessarily mean the NAV is going to fall. It's all about how the underlying company performs. If the underlying company appreciates in that time period and the dividend is not big enough that it's eating out of the Yieldmax ETF share price, then you're going to see great appreciation, not only, of course, in the underlying, but in the Yieldmax ETF. And you're also going to see huge dividends. So it's all about finding an underlying stock which appreciates slowly over time, which doesn't have these huge downsides. I use Tesla and TSOY as an example because it's a perfect example of a failing Yieldmax ETF in my opinion. And the reason I say that is because Tesla has these huge swings to the downside. Look, over the past year, Tesla's up 68%. And over the past year for YMAX, or for TSOY, it's down 38%. TSOY pays some huge dividends, but Tesla is just simply way too volatile. Because Tesla has these huge uptrends and downtrends, TSOY is unable to capture all of the upside, but instead takes all of these downsides here. Huge downside, huge downside. You can see fast appreciation to the upside, downside, downside. And what is the key thing about Tesla? Tesla is a heavily day traded stock. When you're looking at Yieldmax ETFs, they pay a dividend based off volatility, but too much volatility works in the opposite direction because Tesla's at all-time highs where TSOY is nowhere close. They are a Yieldmax ETF which IPO'd at $20, but because of a stock split, they are now boasting really a starting value of $40. So they're down more than 50% on their share price, yet Tesla, the underlying stock, is at all-time highs. That's why I say it's failing. Versus Coney, which is actually down quite a bit from all-time highs. You're looking at probably about 30%, and yet Coney really down about 30% or so because of the great appreciation and the slower downtrends we've seen, more gradual downtrends like this one right here. Nothing choppy like Tesla. So all in all, if you're looking to invest in Yieldmax ETFs, I'm no professional, and this is not professional advice by any means, but I do have experience investing in Yieldmax ETFs. And from my experience, I have found that the best Yieldmax ETFs are the ones with an underlying stock which is not super volatile, which maybe trends up slowly over time and doesn't have huge downsides. It's a stock that you believe in because, of course, when you're investing in the Yieldmax ETF, you're investing in the price returns of the underlying stock. And it's just important to stay focused and continue to reinvest. Reinvesting has been the basis of my account. It's how I've grown my account and, of course, achieved this 8% return. If I didn't reinvest, I wouldn't be accumulating more shares and more monthly income every month. So if you want to grow your monthly income, make sure you reinvest. You look for smart Yieldmax ETFs to buy into and look for Yieldmax ETFs which you believe in the underlying company. So if you guys enjoyed this video, thought it brought you value, we're up to 6,813 subscribers. Don't go anywhere because we have a lot of great videos on this channel. I hope you guys enjoyed, and thank you all for sticking around to the end, and I hope to see you guys in the next video.